Dwijen.
Hi.
Hi. Thank you for having us here. It's so wonderful.
Thank you for coming. It's my pleasure today.
Great. So for Korea audience who might not know you, maybe a little bit of like introduction, like what you do, what your team does.
Yeah, sure. My name is Dwijen Gandhi. Lead the product development team at ICE Data Indices, where we maintain and manage and develop new indices across multiple asset classes:
Great.
equities, currencies, commodities, fixed income, volatility, mortgage rate lock,
Great.
including many thematic indices.
So you look over all the global products.
Exactly. Yeah.
Okay.
So our job is to work with clients, understand end investor needs, and develop new indices that will target what they're looking for.
Yes, I mean, then I found the perfect person to have a talk with. So first, like looking at the global market 2025, what are the most significant changes that you have noticed like over the past few years?
I think a couple of key trends. First, we've seen a lot of active ETFs enter the
Sure.
market. And what that has led to is essentially existing ETF issuers have expanded their product ranges to include these active ETFs alongside passive ETFs as well. Also, we're seeing a lot of new firms enter the ETF space. So we're seeing mutual fund issuers enter in the ETF space to launch these active ETFs.
Sure.
Another key trend is the kind of rise of cryptocurrency ETFs. So we're continuing-
Cryptocurrency.
Yeah,
Okay.
so Bitcoin and Ethereum ETFs. We're continuing to see strong demand, a strong launch pipeline for those types of ETFs. Another area that's very, very strong is thematic ETFs. That's been the case for many years, but it's continuing in 2025 with a focus on AI and semiconductors. And finally, we're seeing a lot of demand for options-based strategies. And that's really just this drive for yield and high income. And that's leading to a lot of covered call types of launches and other types of strategies. I think overall what's driving this is a trend from active to passive, but also a trend from other fund vehicle types to ETFs.
Yeah, I mean the ETF market, it has surpassed over like 15 trillion like US dollar, and also it's mostly from US,
Yeah.
right? So maybe like what do you see the primary driver of this, like AUM keep growing and growing? Like
I think it's twofold. One is we're continuing to see strong retail participation in the ETF market,
Sure.
but we're also seeing a lot of institutions enter the ETF market as well. So this could include pension funds, other insurance companies as well. We're also seeing ETFs take a little bit of a different position in the end investor kind of value chain. So specifically, ETFs are being included into model portfolios and also digital offerings. So online apps that can let investors buy and sell ETFs. I think all of these are driving strong ETF growth in the US alongside all of the strategies that I talked about before.
yeah, I mean I think you mentioned before about Korea
Yeah.
products like cover call strategies like gold or AI tech driven, those thematic ETFs are gaining huge attention from the retail clients.
Yeah.
So I kind of wonder what is kind of tracking the American retail clients nowadays? Like, do you have any?
Yeah, I mean, so I think thematics are very strong. We're seeing not just interest in AI and semiconductors, but also interest in some of the hard assets. So, for example, gold mining companies
Sure.
or electricity infrastructure, kind of the the infrastructure that's supporting both the cloud boom and the digitalization of the world economy, as well as electricity, which is driving all of these different areas.
I mean, it's kind of interesting to see that cover call is also gaining powers here, and it's
Yeah.
also gaining powers. It's like a world phenomenon thing, maybe.
Exactly. Yeah,
Right?
I think options-based strategies, alternatives, strategies, have been on the sidelines for a long time, and there have been indices out there,
Sure.
buy right, put right, covered call type strategies. But I think in the interest rate environment of the last few years and today's kind of strive for yield on the part of investors, we're seeing renewed demand for options-based strategies globally. And I think there's different ways of approaching it. Some are on broad-based indices, others are more narrow focus-based option strategies. And I think that's just really meeting the needs of a wide range of investors.
See, I mean, like these option strategies, they didn't exist like a decade ago, but they're now. So honestly, sometimes I feel like there's no more new product to come out, but it's coming out and out and out again. So like, Do you have any like what kind of like recent developments or maybe recent thing that you have supported that found it very innovative?
We've been focused, this being the NYSE, we've been focused on some of the early company growth area, right? So for example, we just launched the NYSE IPO index, which holds companies that have recently listed on NYSE markets. So it's really a play on some of that early company post-listing growth. A lot of new companies, especially in the tech space, that are listing on the NYSE markets.
Only the IPO companies.
Exactly,
Oh, great.
yeah. And it also includes things like direct listings and also new listings from spin-offs. But also we've even gone a little bit further than that. So recently we worked with a third party to calculate and administer an index that essentially holds private company unicorn companies as well. So we've been very, very innovative in that kind of early company growth stage of the investment cycle. And then also, we're continuing to look at new data sets and develop out new thematic indices as well. So I think there's a lot of new things going on.
Yes, and you and like RACTF, we had worked on one of the index that was the U.S. focused manufacturing index, right?
Exactly.
Yeah. So what was the idea behind creating it?
I think that's a perfect example of where we as an index provider collaborate with KIM and ACTF to essentially combine our ideas and come up with a strategy that can represent a real world kind of megatrend. And of course, that megatrend is kind of changing U.S. policies and some of the trends around globalization. And so what we did was we started with a small and mid cap universe with the NYSE US Small and Mid 2500 index. And then we essentially looked for a couple of things. One, we filtered for manufacturing and industrial type companies based on their business line. Second, we looked for those companies that had a very strong US focus. We measured that based on geographic revenue. So we're looking for companies that have a very high revenue exposure to the domestic US market. And then finally, we added on a couple of fundamental tilts. So we're looking at positive trailing revenues, positive forward earnings estimates, and then also a current ratio greater than 1. So what's the end result? It's really a profitable, high quality, US focused manufacturing and industrial index, which is, in the context of today's markets and globe, is a very fitting theme.
Yeah, I mean, new things, they just are going to keep pop up, right?
Exactly.
Yeah. So like from your perspective, because you work globally, like I'm curious how you actually assess the Korean ETF market in global perspective. Like how would you?
It's funny you say that because I think the Korean ETF market is very similar to the US ETF market because there's so many different options. And I think in a way, the products cater to less sophisticated investors and also more sophisticated investors as well. I'm impressed by the level and the complexity and also the how well built these indices are and these products for Korean investors, ranging from thematic ETFs to options-based ETFs and the like.
Yeah, a lot more to explore in Korean market.
Yeah,
so
exactly.
Please pay attention to our market.
Yeah.
Okay, great. So, thank you so much for sharing your insights. To wrap up, maybe do you have any final thoughts or perhaps like a broader insight about where you see the index is heading in the future?
I think we're at the forefront of what we call like indexing 3.0, and I think that's really going to take several forms. We're going to see increased demand for customization, right? People want to take these broad-based equity and fixed income index universes and really kind of slice and dice and try to get that specialized exposure that will tie to a real-world trend or a specific investment use case or client preferences. Two, I think we'll continue to see strong growth in fixed income. There are a lot of issuers who are continuing to kind of build out their core fixed income lineup, treasuries, TIPS, corporates, munis, but also at the same time, they're looking at enhanced fixed income strategies as well. Carry, value, credit spread types of strategies. So I think we'll see strong demand there as well. And then finally, besides thematics, which will continue to be strong, it's just a question of which thematic and whether it's tech, biotech, or kind of more geopolitical, I think we're going to continue to see multi-asset ETFs rise, and
Sure.
for that we'll have multi-asset indices that are built as well. So we've recently helped clients in Asia build out multi-asset class indices that combine equity and fixed income, but they can also combine other asset classes as well, like
Great.
commodities. So
Just adding more complexity and more sophisticated and more like interest coming into the whole product. itself,
Exactly,
right? It's
yeah.
evolving, maybe.
Yeah.
ultimately. Okay. I mean, thank you very much for your team and having setting up. We hope to meet you maybe in Korea next time.
looking forward to it. Thank you.
Thank you.